Hello and welcome to InvestorToday.ca. I'm your host, Dave Glover. InvestorToday.ca is brought to you in conjunction with RBL Communications, your online IR professional. Dateline, April 4th, 2013. The following story is a Vantage Wire exclusive. Guyana's golden luster. Tajiri resources boosted by unexpected Azimuth Troy tie-up. It pays to be friendly to your neighbors, especially in the case of Tajiri Resources Corp, which trades on the TSX under the symbol TAJ. With its flagship Kaburi gold project in Guyana being centrally located within the West Omai project held by Azimuth Resources, who, as of last week, was embraced by a US $208 million friendly takeover bid from fellow Australian gold producer Troy Resources, which trades on the TSX under the symbol TRY and on the Australian exchange under the symbol TRY. Tajiri's in the process of making a strong case for being the newest takeout target in the region, commencing its first pass 3,000-meter drilling campaign on priority targets within Kaburi's 2.5 by 4 kilometer sear golden soil anomaly. Tajiri has enlisted the help of a familiar face in the region to help take the company to the next stage. Dominic O'Sullivan, founder and former president of Azimuth, who, following his departure from the company this past November, purchased the in-country assets of Drillex International. In doing so, O'Sullivan set up a new Guyanese-based drilling outfit in AU Drilling Inc., which Tajiri has contracted to complete the program. O'Sullivan's acquisition came complete with 4 RC drills, one of which was residing directly next to Tajiri's property. This proximity proved to be quite helpful for Tajiri as it saved significant mobilization costs and allowed the contract to get underway immediately. Tajiri hopes that a significant find throughout the campaign will catapult the company into the realm of having serious takeover potential and a possibility of capitalizing on the type of premium witnessed with the Azimuth takeover. Tajiri's drilling program launches on the heels of Azimuth's major takeover announcement. Troy's Azimuth acquisition closed out the month of March on a high note for other players in the region. When last traded, Azimuth's share price was approximately 0.24 cents a share, giving it a market cap of $105 million Australian and $110.2 million US. However, the acquisition came with a healthy 78% premium, as the takeover price was announced at Australian $188 million. Given that Azimuth's larger property surrounds Tajiri's, it's understandable the reasoning behind the excitement regarding getting more data from the drill bit. In a market that seems mired in a downturn, especially for junior explorers, the news was a tremendous shot in the arm for Tajiri and its peers. But the good news in Guyana doesn't stop there. The year started with positive news coming from an update to the Guyana Goldfields Aurora Gold Project's feasibility study. Guyana Goldfields, which trades on the TSX under the symbol GUY. Originally slated with a capex of approximately $500 million, the new numbers came back at less than half that, with a projected cost of $200 million. The new estimates made the project a lot more plausible and overall profitable. The update quiets the critics of Guyana as an economic jurisdiction for gold mining. Previous to the update, many were scared off by the initial projections. However, updates to resource estimates in the former Azimuth properties surrounding Kaburi have also done their part to help Tajiri's case for its effective location scouting. Azimuth had recently started to work on a preliminary economic assessment on its West Omai assets, and in doing so, upgraded the resource nearly 500,000 ounces to 1.65 million in total. The project itself is going to be moving forward with mine development, further developing the area and making Kaburi even more attractive to the outside. Bringing in the expertise of Dominic O'Sullivan is a bit of a coup for Tajiri, as it follows on the heels of the 2013 edition of PDAC. Having left Azimuth without so much as a goodbye, O'Sullivan still has quite an affinity for the region. Given the proximity to his former flagship, O'Sullivan is very familiar with the landscape that Tajiri is operating in. What Tajiri has, that others, such as the larger Guyana Goldfields has, is high grades at near-surface depths. In the case of GUY, a depth of 500 meters is required before the higher grade results start to percolate. In the aftermath of Azimuth's takeover, O'Sullivan would have probably been out of the region entirely had he not been given the timing to purchase his drills. Now the man that some have claimed has a chip on his shoulder is ready to be set loose back upon the Guyana grounds, the grounds that brought him to the region in the first place. The drill program is projected to take 2 to 2.5 weeks to complete. Upon samples being submitted, assays and results should roll out to the market by mid to late May. The company's drilling will be targeted in areas associated with grades of 15.3 grams per ton gold. These coincide with the Sear gold and soil anomaly, where samples have so far been punctuated by 2.66 grams per ton, all of which appear structurally controlled by the two shear zones that appear to be responsible for all the gold in the area. If the company hits on this campaign, it's quite reasonable to expect that Tajiri will go back to the market and raise the appropriate amount of cash at a much more reasonable price level than it is now, and continue to drill off the resource to close out the year. Guyana is still off the map for many investors, and despite positive reports coming from the country's mining sector, may still need more proof that it's a great place to be. For Tajiri, the stars seem to be aligning, as it's benefiting from the activities of its neighbors while preparing to ramp up its own news for 2013. While the company still holds a respectable property in British Columbia, the focus is undoubtedly upon Guyana. At $50 a meter for RC drilling, the company can get a lot done on a smaller budget, compared to $75 to $100 a meter in British Columbia and as high as $150 a meter in the Yukon. As well, Kaburi holds the distinction of being one of the most accessible projects in the country, with the rare ability to drive to the property and paved access projected by the end of 2014. Hydropower is being set up 20 kilometers to the southeast. Given the dynamic duo of drivability and cheap power, with only 43 million shares outstanding, it's apparent that management has done everything in its power to keep dilution to a minimum. Amongst a sea of depressed faces at the PDAC, Tajiri's future is actually worthy of a smile. Success begets success, and positive numbers on this current drilling campaign could really turn a corner for the company. Keeping its eye on the prize, Tajiri can look to Azimuth's acquisition as an extreme positive for its exit strategy down the road. The increased presence of Troy resources in the area, along with a more positive outlook on the Aurora project for Guyana goldfields, gives the reasons some added heft. Now it's just a matter of Tajiri getting the recognition it deserves, once the results from this drill campaign hit our inboxes later this month. For Vantage Wire News, this piece has been written by G. Joel Curry for the Bottom Line Report. I'm Dave Glover for InvestorToday.ca. We'll see you next time.